6 common home insurance mistakes. You can drop everything. Protecting yourself along with your family may suggest purchasing additional coverage, but more insurance isn't necessarily the solution. Rather, it's vital that you review all your wants, consider specific guidelines or policy alternatives, and coordinate your coverage with additional aspects of your financial situation. Here are 6 distinct shortcomings which could prove costly. 1. Neglecting to get regular coverage evaluations and updates. The worth of a collection may possibly grow. Extensive home renovations could suggest a sudden rise in the worth of your property, along with the rate tightening of resources in the estate planner because of divorce, a death in your family, or the birth of a child could warrant policy changes. Actually missing major occasions, you almost certainly need an all-inclusive evaluation of all of your insurance coverage at least every couple of years. 2. Departing gaps in homeowners coverage. Any homeowner has to evaluation coverage often to keep up with increasing replacement costs. But covering different kinds of homes in various locales poses additional problems. If you get insurance from more than one insurance company, you may confront comparing rules, restrictions, and plan renewal days. For example, the indebtedness limitation on the policy to get a second dwelling might drop below the minimal on an excess liability policy designed to fit the insurance on your main dwelling. You can wind up liable for the difference. 3. Forgetting to cover household employees. When someone works for you or your family, as a nanny, landscaper, personal assistant, or in another function, you will be responsible for medical expenses and lost wages in the event the employee is hurt at work. Several states need household companies to pay into an employee's compensation fund, while in other states it's discretionary, but providing such insurance could possibly be compulsory for ensuring your financial well-being. If an employee drives your auto, likewise make sure he or she's included on your policy. 4. Underinsuring artwork and memorabilia. Standard homeowners' policies limit coverage for the deficits of collectibles, furs, along with other valuables. And while you can schedule additional coverage, ensuring the real worth of a group of contemporary art or vintage muscle vehicles likely may need a specific policy addressing several crucial problems. How is the worth of the collection determined? You'll need a specialist appraisal when the coverage is designed, with regular upgrades as items value. Will a damaged or destroyed thing be paid for with funds, or are you going to be needed to have it replaced or renewed? Will improvements to your own collection automatically be protected? 5. Neglecting your indebtedness as a board member. Excessive liability coverage may help shield you when you are sued as a director of a non-profit's board. Or for more comprehensive protection, you might want to consider specific directors' and officers' liability insurance. 6. Blowing off property's unique features. One benefit of importance is a means to possess extraordinary residences. One drawback is the fact that they could be difficult to guarantee adequately. Normal homeowners coverage won't cover the materials and workmanship needed to reconstruct that 19th century showplace you've meticulously renewed. Coastal homes may face hurricane injury, while an area in the Cal Mountains could be subject to earthquakes or wildfires. Meanwhile, town co-ops or condominiums may need guidelines tailored to their properties or associations' coverage. Virtually every aspect of the situation could cost you dearly. Insurance regulations can vary widely from state to state. Different kinds of property need specific coverage, and ranges of artwork, classic autos, along with additional unique things could be difficult to shield completely. Meanwhile, offering on a non-profit's board could subject one to additional personal responsibility. Getting the correct property and casualty insurance policy may not rank high on your list of fiscal priorities. Compared with investment choices and estate planning problems, queries about the language in your homeowner's policy, say, may seem scarcely worth considering. However, the more productive you become, the more difficult your asset protection needs are most likely to be and the more you need to lose. Suppose, for instance, this additionally to your own principal residency a historical home you also possess a home at the beach plus a condominium in the city. The attributes are in 3 distinct states. The worth of your number of abstract expressionist paintings has exploded quickly. And you only volunteered to serve on the board of directors of a charity. Click here to visit quotesagent2u.com.